How do you advise people who say long-term care insurance is too expensive?
You should never assume long-term care insurance is too expensive until you've really explored your options for yourself. The reality is that we're really fortunate that we now have a lot of options available on how to plan for and pay for long-term care costs down the road. But most people still have only heard rumors about long-term care insurance. They've heard how expensive it is, that the premiums go up over time, or issues with making claims or whatnot. And a lot of that has to do with what I call traditional long-term care insurance. That's usually the one that you hear people complaining about. Traditional long-term care insurance, you go through a significant amount of health screening during maybe your 50s or 60s while you're still quite healthy. And if the company approves you, then they say, okay, if you pay us an annual premium, then down the road when you get older, if you wind up needing long-term care, we'll pay X dollars a day for 2, 3, 4 years, whatever the terms of the contract are, but we'll help pay towards your long-term care expenses. And that traditional long-term care insurance, what you will hear people complain about, it is rather expensive, although arguably it's still a lot less than the cost of the long-term care itself. But it is also the use it or lose it insurance. So you pay those premiums over time, and if you wind up needing long-term care, then great, you have a policy and you use your coverage. But if you wind up not needing long-term care and you pass away without ever using that policy, then you never got anything back from the policy after paying all those premiums for all those years, and that really is a big frustration point for a lot of families. The second issue that people have run into with those traditional policies is that the premiums often increase over time. So you bought that policy at a certain price point that you thought was affordable and provided good coverage, but then as you get older, you might receive periodic premium increases, and what happens is over time, people tend to start chipping away at their coverage. Each time the premium goes up, they might say, well, I'm not sure that I can afford this premium increase, so I'll reduce my coverage instead. And then eventually they may even drop the policy entirely if they find it's becoming too cost prohibitive. We've helped a lot of families explore other options that they found a lot more palatable than just traditional long-term care insurance. We're really fortunate that we now have better options available. There are now life insurance policies that have long-term care riders, so that really does away with that whole use it or lose it issue. The way these policies work is if you wind up not needing long-term care, the policy pays a death benefit instead. Or if you need long-term care, then you can draw off of the policy to help pay for your long-term care needs, and then the death benefit may decrease or go away depending on how much you use towards your care. Thereby, it's kind of making it this more of a win-win scenario in that you know either you're going to be able to use that policy for your care, or whatever's remaining, your family will instead receive as a death benefit instead. There are also now annuities that have long-term care coverage to them. So annuities can be a popular retirement planning vehicle where you invest in the annuity. It might grow over time, and then eventually during retirement you can turn that annuity into a monthly income stream to help supplement your retirement income. Well, some of these annuities now have long-term care riders where the contract might say, okay, if your monthly payment was X and then you wind up needing long-term care, we're actually going to increase your monthly payment. Maybe we're going to double your monthly payment so that you have more money coming in to help you pay for your care costs. So that can be another great way to potentially have additional funds available to help you pay for your long-term care needs. And then lastly, there are even some options available if there's already health issues. We've run into quite a few clients that have actually been declined for traditional long-term care insurance because the health screening is typically quite vigorous with those policies, but we were still able to find annuity coverage or other long-term care planning options for them so that they had some coverage to help them pay for future long-term care costs. If you're concerned about the potential costs of long-term care, then I would strongly encourage you to call our office at 919-443-3035 to discuss a long-term care assessment so we can help you figure out what legal planning or financial planning options might be available to you to help you address your long-term care need concerns in the future.